Dear learners, today we are going to deal about electronic payment types. Introduction. E-commerce is the exchange of goods and services activated through an electronic method. From advertising to payment, everything except delivery of physical goods can be done through electronic means with the adaptation of science and technology. Consumers having a variety of choices to pay for their e-commerce transactions based on their preference driven by convenience, availability, security, etc. Electronic payment is nothing but the financial exchange that takes place online between buyers and sellers through some form of digital gadget. Online stores accept a variety of forms of payment because they are ubiquitous, convenient and easy to use. The most popular forms of payment on the internet are payment cards, electronic cash, mobile wallets and stored value cards. Learning objectives. By the end of this module, one will be able to understand what is meant by an electronic payment, come to know about the processing of an electronic payment, have in-depth knowledge about the types of electronic payment. To elaborate the need for standardization of electronic payment mechanisms. What is an electronic payment? One of the significant functions of electronic commerce sites is the handling of payments over the internet, since e-commerce involves the exchange of some form of money for goods or services. An electronic payment is defined as paying for goods or services on the internet using electronic devices such as computers, smartphones or tablets. Electronic payment is a method in which a person can make online payments for purchasing goods and services without physical transfer of cash and checks, irrespective of time and location, through the internet directly to manage the e-business environment. E-payments come with various methods, whereas the most popular forms of payment on the internet are payment cards, electronic cash, mobile wallets and stored value cards. Now let us see the processing of an electronic payment. Electronic payments, also known as e-payments, are made instantly, being convenient and saves lots of time, where every aspect of our lives happen at a fast pace. The basics underlying the processing of an electronic payment are as follows. Customer Act. The processing of an electronic payment begins when a customer visits the merchant's site, adds the items to the shopping cart and click Buy Now. The payment form is displayed, in which certain information such as card number, expiration date, CVV code, address are to be filled. Depending on the payment method, the customer is either redirected to bank's website or a payment app, else continues the payment on the website. The next is the authentication of the payment. The payment gateway ensures whether the payment information is valid, and if everything is fine, then the process continues. The payment gateway reports back the successful transaction and the customer receives a payment confirmation. Merchant's account credited. An electronic payment provider receives the payment from a customer's bank and transfers it to the merchant's account, thus ending the payment process. In general, electronic payments are a fast, cheap and secure means of payment with lots of benefits for both merchants and consumers. Moreover, electronic payments are highly effective for international transactions and there is no need to worry about currency conversion. Let us have a look at the types of electronic payment. The electronic payment is classified into various types in which the notable ones are electronic fund transfer, payment cards, electronic cash, electronic wallets, electronic checks, stored value cards. The various types of electronic payment are described in detail as follows. Electronic fund transfer, which is also known as EFT. Electronic funds transfer is one of the oldest electronic payment systems and is the groundwork of the cashless culture where paper bills, checks, etc. are eliminated. EFT is used for transferring money from one bank account to another directly without the involvement of paper money exchanged by hands. EFT is one of the convenient payment methods to conduct business online. Advantages and disadvantages of using EFT. Increased efficiency, safe and secure, low administrative cost, transaction amount limited. The next is the payment cards. In business, the term payment card is commonly used as a general term to describe all types of plastic cards that the businesses and consumers use to make purchases. The core categories of payment cards are credit cards, debit cards and charge cards. Credit card. Credit cards are by far the most prevalent method that consumers use to pay for online purchases, since the recent surveys have found that more than 90% of worldwide consumer internet purchases are paid for with credit cards. Credit cards are the plastic cards that facilitates customers to carry transactions through electronic data processing system such as Master or Visa with a predetermined spending limit to the holder of the card. The spending limit is based on the user's credit history such that a user can pay off the entire credit card balance or pay a minimum amount each billing period. Credit cards are extensively accepted by merchants around the world because it provides assurances for both the customer and the merchant. There are two types of credit cards in use today. Credit cards issued by credit card companies such as MasterCard, Visa are issued based on the customer's income level, credit history and total wealth which the customer use to buy goods and services. The limitations of credit cards is that it is not used for small payments, and also due to security issues, these cards have a limit and cannot be used for excessively large transactions. The next is the credit cards issued by department stores. Businesses extremely benefit from these cards and are cheaper to operate. They are widely issued to and used by a broad range of customers, since businesses offer incentives to allow customers to open an account. The next type of card is the debit card. A debit card resembles a credit card, but it works quite differently. Debit cards are issued by a bank or a financial institution in which the cardholder has an account, and the card enables consumers to access the account for a variety of transactions. The amount of the sale is removed from the cardholder's bank account and transferred to the seller's bank account immediately for a transaction in an online debit card. The difference between credit cards and debit cards is that in order to pay with a debit card, one needs to know the personal identification number known as PIN, and a hardware device is mandatory to read the information that is stored in the magnetic strip on the back. Many ATM cards have the features of a debit card, and obtaining it is much easier than obtaining a credit card. The benefit for the customer is the easiness of use and convenience, as well as the cards keep the customer under his or her budget because they do not allow the customer to go beyond his or her resources. The merchant is not charged any fees, as well as payment processing is fast when a customer uses debit card to pay for purchase. Hence, they prefer debit card for payment by the customers. Debit card purchases can have less protection than credit card purchases for products that are never delivered or flawed. Returning of goods or cancelling services purchased with a debit card is treated as if the purchases were made with cash or check. Charge cards. A charge card issued by companies such as American Express and carries no spending limit, but the entire amount charged to the card is due at the end of the billing period. In the United States, many retailers such as departmental stores and oil companies that own gas stations issue their own charge cards, since most of the consumers have concerns about providing their payment card numbers to vendors online. Advantages and disadvantages of using payment cards. Payment cards have several features that make them a widespread choice for both consumers and merchants online and offline transactions. Payment cards provide fraud protection because when a merchant accepts payment cards for online payment, the merchant can authenticate and authorize purchases using a payment card processing network. The greatest pro of using payment cards is their worldwide acceptance, that is, they can be used anywhere in the world, and the currency conversion, if required, is handled by the card issuer. One of the significant disadvantages is that the payment card service companies charge merchants per transaction fees and monthly processing fees. The next type is the electronic cash or e-cash. Electronic cash or e-cash is a general term that describes any value storage and exchange system created by a private entity other than government that does not use paper documents or physical cash, and that can aid as ancillary for government issued physical currency. E-cash can be defined in simple words as the money available in an electronic account to carry out electronic business transactions on the internet. Electronic cash can be readily exchanged for physical cash on demand, but on the other hand, because electronic cash is issued by private entities, there is a need for common standards among all electronic cash issuers so that one issuer's electronic cash can be accepted by another issuer. Unfortunately, this need had not yet been met since each issuer has their own standards, hence electronic cash is not universally accepted. Mondex is a good example of eCash. eCash card has two types, namely a standalone card containing eCash and a combination card that incorporates both eCash and debit. Process involved in eCash payment. The process involved in a eCash payment are: the user first must possess a cash software program and a bank account. The software allows the user to download electronic coins to his or her desktop. From the bank account, the user can withdraw or deposit eCash with the help of computer. The beneficiaries of the eCash can send money to their bank account similar to the physical cash deposit. Now, let us have a look on the advantages and disadvantages of using eCash. Electronic cash involves lower transaction cost and it does not need any special authorization like credit cards. Electronic cash is secure, convenient and adds control to everyday customer cash transactions as it operates on a smart card which includes an embedded microprocessor chip which stores cash value and the security features that make electronic transactions secure as well as keep track of the eCash transactions. Most of the world's population does not have credit cards due to the minimum income requirements or past debt problems or simply because they are too young, and for all of these people, electronic cash provides the solution to pay for online purchases. Electronic wallets or e-wallets. As customers are becoming more enthusiastic about online shopping, they have begun to tire of repeatedly entering detailed shipping and payment information each time they make online purchases. Therefore, to address these concerns, many electronic commerce sites include a feature that allows a customer to store their name, address and credit card information on the site. However, consumers must enter their information at each site with whom they want to do business, which is overcome by the significant feature of entering the information only once that can be used in all e-commerce sites using the e-wallet. Electronic wallet is like a physical wallet which can hold credit cards, eCash, owner's identification, address and provides that information at an electronic commerce site's checkout counter as well as has the memory for storing the balance of an account in a financial institution. Electronic wallets make online shopping a convenient one for frequent online shoppers because they store personal and financial information such as credit cards, passwords, PINs and much more, along with the ability to keep track of billing and shipping information so that it can be entered with one click at participating merchant's site. E-wallets can act as payment cards when they are used to store credit card information or as e-money when they store electronic currency. A well-known example of an e-wallet on the market is Microsoft Wallet and Yahoo Wallet. The elimination of re-entering personal information on the forms results in higher speed and efficiency for online shoppers. Classification of e-wallet. Electronic wallet is classified into two categories, namely server-side electronic wallet, which stores the customer's information on a remote server which may belong to a merchant or wallet publisher. Customer-side electronic wallet stores customers' information on user system. Advantages and disadvantages of using e-wallet. In server-side wallets, the e-wallet software remain on a server and thus require no download time or installation on a user's computer. Server-side wallets can be accessed from any computer since it is portable. Although server-side electronic wallets employ strong security measures that minimize the possibility of unauthorized disclosure, security breach could reveal millions of users' personal information, including credit card numbers, to unauthorized parties. Client-side e-wallet. Client-side electronic wallet stores consumers' information on his or her own computer, therefore less possibility of security breach. Client-side wallets need to download e-wallet software onto every computer used to make purchases, which is a major drawback of client-side wallets. Client-side wallets are not portable, therefore e-wallet is not available when a purchase is made from a computer other than the computer on which the wallet resides. For a wallet to be useful on many online sites, the electronic wallet manufacturer and merchants from many sites must coordinate their efforts so that a wallet can recognize what consumer information goes into each field of a given merchant's forms. The next type is the electronic checks. Electronic checks are also known as e-checks and can be used in many transactions where normal checks are used, because e-check uses the same legal and business protocols associated with traditional paper checks. E-check is the outcome of collaboration among several banks, government entities, technology companies and e-commerce organizations. It is a new payment instrument that combines high security, speed, convenience, processing efficiency and helps to complete payments over the networks in a cost-effective manner. An e-check can be used by all organizations, both large and small, even where other electronic payment solutions are too risky or not apt. E-check procedure. The payer writes the e-check through a system, uses a digital signature and sends it through the internet. The payee receives it, verifies the signature and approves it. The approved check is then sent over internet to the payee's bank for deposit. The bank official authenticates the signatures and credits the deposit. The payee's bank clears and settles the approved e-check by sending it on to the payer's bank. The signatures are again verified and the amount prescribed in the e-check is debited from the payer's account. The cryptographic certificates play a vital role in helping a payee to determine the validity and identity of the signatures. Advantages and disadvantages of using e-check. E-check is being opted for many online transactions due to many reasons, but have few disadvantages too. Secure and quick settlement of financial obligations. Fast check processing, hence increased efficiency. Very low transaction cost, hence cost effective. Transactions are based on internet, hence network failure may lead to delay in payment. Both payer and payee ought to have an e-check facility. The next type is the stored value cards. Nowadays, most people carry a number of plastic cards such as credit cards, debit cards, charge cards, driving license, health insurance card, identification card, etc. A key to reduce all those cards into a single plastic card is called a stored value card, which is an elaborate smart card with a microchip or a plastic card with a magnetic strip that records the currency balance. The stored value card with a microchip stores more information than a stored value card with a magnetic strip. Smart cards. Smart cards are stored value cards with a microchip which allows electronic money to be stored in a secure medium with a built-in microprocessor and memory. A smart card can simultaneously be an ID, a credit card, a cash card or a repository of personal information such as telephone numbers or medical history, as well as enable the bearer the ability to access information and physical without any need for online connections. Along with storing and periodically recharging the information, the money on the card is saved in an encrypted form and is protected by a PIN to secure the smart card. In order to pay via smart card, the credit must be introduced into the hardware terminal that requires a special key from the issuing bank to start a money transfer in either direction. Smart cards have been extensively used in the telecommunications industry for years to hold information on healthcare, transportation, identification, retail and banking, etc. in a single location. Advantages and disadvantages of using stored value cards. Few advantages and disadvantages of stored value cards are listed below. Store large amount of information with reduced space. Store many types of information. Portability. Highly secure. Lack of universal standards for their design and utilization. The standardization of electronic payment mechanisms is crucial to the success of e-commerce. While electronic payments are being more convenient and comfortable for a larger audience, the framework behind the system is struggling to find a standardized system of rules and regulations about how to handle, record and secure global payments. SET and SSL are two standards that protect the integrity of online transactions, but still the payment system is not fully standardized and is to be in near future. Now, let us summarize what we have seen in this topic. The technology of the internet and the development of electronic commerce have grown up in running online business successfully, where payment transactions are done without face-to-face communication. Electronic payment method is nothing but the mode of payments over an electronic network such as the internet. The success of electronic payment is the one of the reasons behind the incredible growth of e-commerce. Hence, for the electronic payment systems to be successful, security and privacy dimensions perceived by consumers as well as sellers should be well managed, which in turn would improve the market confidence in the system. Thank you.